thanks. Oops, no. Hello? Okay. Thanks, good afternoon everyone. Hope everyone had a good lunch. Anyway, I think I'm really excited here to moderate this next session, which I think really is tackling an interesting question. I think after decades of Asia being the world's kind of growth engine, and the real question is what comes next. Now I'm just going to set the scene a little bit, but really the floor here I think is all about my fellow panelists. Now I think the near-term picture is really one of resilience. I think if we look at the projections from either IMF or the ADB, the story of 2026 is one of some moderation in growth, shaped in a way because of what's happening in the Middle East, but with kind of broad recessions largely averted. In fact, if you look at the 2027 forecast for a lot of these multilateral bodies, those forecasts have remained largely untouched. But I suggest actually the more interesting question for this panel is really kind of beneath these cyclical numbers, in really the structural forces that are shaping the broader macro environment. I'm going to put 5 up on the table, and I'm sure, I think over the course of this session, we will address those. The first is geopolitics, which I think this region, both literally as well as figuratively, sits in the middle of the ongoing US-China competition. The second is on finance. The region is largely composed of high savings, surplus countries. The issue of global imbalances, I think, is coming back to the limelight. The third is the changing growth model that we are seeing in China, away from property towards advanced manufacturing, green technology, and semiconductors. The fourth is on shifting supply chains in the region due to greater fragmentation of trade. And last but not least are really some of these longer term issues relating to demographics and technology, which again, Asia, I believe, is on the forefront of. So to help us unpack this wide range of issues, I really have the privilege of hosting what I think are the perfect set of panelists here. They straddle both industry as well as academia. I will introduce them as we go along. I'm going to start things with Manu Bhaskaran on my left. Manu is the founding CEO of Centennial Asia Advisors and an adjunct senior research fellow at the Institute of Policy Studies. He has been studying the politics and macroeconomic trends in Asia for the past, dare I say it, 45 years. Manu, help us set the stage. In light of the forces that I've highlighted above, how do you see the outlook for Asia?
Thank you, Prakash, and thank you to the organizers for inviting me, and thank you to the audience for coming at the difficult post-prandial period where the blood flows to the stomach to digest the food, and we'll try and make this less demanding for you. Let me leverage off what Prakash said and make 3 points. The first is that some of the uncomfortable trends that we are seeing in the world economy today, I believe, will become entrenched and create more headwinds to growth. So that's the bad news. The second point I want to make is that despite this, we should not give in to pessimism, because I think there are always opportunities in anything that happens, and I think it cannot be all that bad. So the third and final question I'll address is, what will distinguish the winners from the losers? Which countries can overcome the challenges and exploit the opportunities? And I think there are 2 key things to look out for. One is the resilience that Prakash highlighted, but which is the capacity to absorb a shock, a sudden sharp shock, and bounce back. But the other thing I think is adaptability, the seamless ability to adjust to long-term structural shifts, whether it is climate change, technological challenges, or whatever. And those are the factors that matter. So let me explain a bit more about each of these points. So first of all, why am I saying that the challenges will become more entrenched? I think we are in a rather strange period now where there are bad things happening, but somehow the world economy has absorbed these things, and there's this view that the resilience is a feature, not a temporary one-off thing. I suspect that's a little too benign. It's largely correct, but maybe a little too benign a view. Why do I say that? Well, first of all, I think the geopolitical pressures are going to be more and more intruding into economics. One thing that's obvious is defense spending. Defense spending has already shown a big trend, uplift, particularly in Europe. That's because of Russia. But more, it is much more than that. The nature of warfare has changed. And it really now requires countries to invest very heavily in very expensive technology, defense tech, in order to maintain your position in the world, in a much more turbulent world. So that's going to be a feature that will increase, and we will have to find the funding for it, because there are lots of competing other needs, right? The other thing is coming closer to home. I think in this part of the world, this is going to be the primary arena for US-China contestation, which I see as a zero-sum game. Why? Because one power wants the other power out of the Western Pacific, and the other power, the US, will not vacate the Western Pacific. I think it's a zero-sum game. So this is going to result in our region, our countries, our governments, and our societies coming under all kinds of pressures to take sides and so on. Second thing is, we all know tariffs are a problem. But what I see is moving from a situation we have today, where we have this haphazard imposition of tariffs, to one where protectionism becomes really embedded and broadens out. So it won't be just tariffs, it will be export controls, the controls over technology, exports. It will be industrial policies that are inward-looking and therefore hostile to imports and domestic producers. Obviously, for a region like Southeast Asia, which has thrived on exports and foreign investment and so on, that is going to be a challenge. Thirdly, I think the downsides of new technologies will become evident earlier than their upside benefits. A lot of people talk about the immense productivity gains that you... That's not what I say. Okay, so there's a lot of hope that the productivity gains will become evident soon, but my suspicion is following from past experience. Typically the job losses, the dislocation comes first, and then you get the benefits over a longer period of time. And that will obviously cause challenges. I would also say that there's a lot of focus on artificial intelligence, AI, which is very real and very correct. But I think in the extreme focus on AI, we should not forget that there are multiple technologies, technological revolutions going on. In renewable energy, in biomedical sciences, in material sciences, and it is the combination of all this that will create dislocations and so on, but also, in the end, opportunities. Fourth, again, we can see that fiscal pressures are growing and financial conditions may tighten. I believe that the political elites in countries like the United States, in Europe, in Japan, and elsewhere, do not have the political will to address these problems until a crisis faces them head on. So I think this is going to get worse, and I think the result will be that bond yields will go higher, and that will create ructions in financial markets. Then, of course, you've got climate change, which I think is becoming more evident. You've got the super El Niño coming that will really, I think, hit us quite hard. And finally, you've got the shifting impact of demographic change, with fertility rates falling faster. So it sounds very pessimistic, but I am an economist, a member of the dismal science fraternity, so you'll excuse me. However, the second point I want to make is that, like I said, there are opportunities in all these trends. One is there will be supply chain reconfiguration. You can see that happening. The foreign direct investment data that's coming out shows that it is happening, and it suggests that this region is a potential winner from that trend. The technological revolutions also, I think, are quite real. And, just as an example, the acceleration of progress in the biomedical area, new therapies, new equipment, new medicines, I think will enhance not just lifespans, but health spans, the quality of life going forward. And that's, I think, a great achievement that we can look forward to. Let me conclude by talking a bit about the pattern of winners and losers. I think you'll see a very stark pattern. Some people will win big and others will just be losers. Why do I say that? Because first, as I said, the key determinant is resilience. Not every country can get resilience right. What do you need for resilience? You need to get the basics right. It sounds simple, but a lot of countries just don't seem to get it together. Get your macroeconomics right, fiscal monetary policies, right? Diversify your economy and ensure that there are shock absorbers in the system, particularly in the financial sector. If you look at the Asian financial crisis, why did a small shock, the mismanagement of the baht devaluation, end up in a major crisis? It was because you had these shock multipliers, shock amplifiers, right? Financial balance sheets, banks that led foolishly, currency mismatches, maturity mismatches, and all that, right? So you need to get those things right. Sounds simple, but not many people do it. The other factor is, of course, this thing about adaptability. Which countries have two things that you need? One is the top-down ability to produce the public goods necessary to help these economies adjust to all these big changes, whether this AI, impact on the labor market or whatever. And the second is the bottom-up, more spontaneous adjustment by companies and individuals to these difficult challenges. And I think putting it together, at least in this part of the world, my sense is that Singapore, Malaysia, and Vietnam are probably the countries that are going to do better relative to others in the region. So let me stop here and hand it back to Prakash.
Thanks, Manu, for that very balanced, I think, outlook for Asia. A lot of questions came out of my mind as I was listening to you, but I will park them for later. Next up, I'm going to ask Neil Parrott to share his thoughts. Now, Neil serves as the Group Deputy Chairman and Board Director at the Global Finance and Technology Network, GFTN. He's also Vice Chairman, Asia Pacific for Sumitomo Mitsui Banking Corporation Group, and Independent Director on the Global Governance Board of PwC. Until recently, he was Partner and Head of Asia at Australia at Tikehau Capital. And among the various roles that he has held, he's also served as the nominated Member of Parliament in Singapore from 2023 to 2025. Now, Neil, I mentioned earlier on the excess savings in this region. Now, a large part of that is exported outside, but there's also a potential to catalyze these savings within the region. Help us understand how finance is shaping up to be a growth engine for this region.
Thanks, Prakash, and Manu, thank you for a wonderful overview of this session.
Yeah.
Okay, thank you. Again, thanks for inviting me, and thank you all for making time for us this afternoon, especially after a nice lunch. In my view, when it comes to, if I may go a little more narrow as compared to, Manu gave us a fantastic overview of the region. When I go a little more narrow into finance and what the history of finance has been, and as Prakash mentioned, that we've been great exporters of capital, whether it is Japan, Singapore, Korea, and other countries in the region. And at the same time, we have seen tremendous growth in various aspects of finance in the last few years. And in my view, that's going to continue. So the future, if I may again focus on Asia and in finance, is really driven by a few key innovations as well as developments that have taken place. First and foremost in the payment space, second in the wealth management space, thirdly, if I may broadly say, in the allied family office area, which is, we see that growing rapidly in Singapore. But also broadly speaking, if you look at the development of AI and the application of AI, I think we're going to see more and more of disintermediation happening. with Asian capital. So let me start with payments. A few years ago, 15 years ago, one could imagine what we see today in Jakarta or in Tokyo or in, most remarkably in India, where the transactions, I mean, India has what, 750 million transactions that are happening online, 240 billion in the last year, which is just remarkable in terms of how many have just taken, how much growth has just taken place in a very short period of time. I think that's going to continue. We're not dependent on Western infrastructure as we used to be historically. We are much more independent. Having said that, there are obviously guardrails that need to be put to make sure that consumers, institutions, and various organizations are well protected in that regard. Perhaps we need to do better in that sphere. And the reason I say that is when we look at the guardrails in our part of the world, many of the protections that should go with any development in the payment system are work in progress. Are we worse off than other regions? I don't think so, but we are certainly not at the cutting edge of providing the adequate protection that we need to. So I think that's going to be a key driver going forward. Wealth management, fastest growing area for wealth growth. At the same time, the region of the world that needs the wealth to be put to work in an optimal way. Now, how do we channelize our own savings into development of the region? I think that's going to be a key point for us. There has been significant progress, and I'm just not talking about the ADBs and the AIIBs, etc. of the world, but fortunately every country has focused increasingly on these aspects. Having said that, still we export way too much capital. Many Western investors, whether they're institutional investors or otherwise, see Asia as not as a good place to invest, but as a good place to source liquidity for their investments in the West. And I think that's going to change. That has started changing, but that has to change at a much faster pace than it has so far. I think family offices play a key role in that regard. And we're sitting all here in Singapore, which has seen tremendous growth of family offices, which I think will continue to happen because safety, security of capital is paramount. Personal security and safety is paramount, and Singapore provides all that. There are other jurisdictions that do that in different degree, and we'll see new jurisdictions come up in the years to come. But I think that's a very important component of finance in Asia. The overall aspect of finance that I'd like to emphasize is with AI coming into play. See, earlier we used to, how best to put it, allow certain activities to be done by, or certain products to be manufactured by other people. Today, AI is into advice. So now we are making decisions based on models where we have had nothing to put the model together. What does that tell me? It's a question of the trust aspect has become at a super premium. And I think many financial institutions in Asia are struggling and will continue to struggle, more from a standpoint that while their customers, their clients, had a lot of faith in their respective institutions, the reality is with AI coming into play and with so much decision-making being parlayed to models and to sources that you're not in direct touch with, the credibility of the institution is of paramount importance. Now, from an institutional standpoint, being part of a board of a large bank for the region, the biggest issue here is how do you convince your clients that you're doing everything right and the quality of the information, the quality of the advice that you're providing is of top notch and is the best thing for them. And that's a hard thing because at the end of the day, the institution remains responsible. You can't run behind a model and say, well, we got the wrong model and I'm sorry, and so the responsibility stays there. So I think that trust aspect is of even greater importance. Lastly, I do want to bring up, and I know we have a further discussion on, perhaps on how the world is evolving, but to me, the fragmentation that has taken place in terms of financial flows between the blocks, if one may broadly call it that, with the US on one side and perhaps China and Asia on the other side, or certain parts of Asia on the other side, I think that has led to a disconnect, which is not good for overall development. And the reason I say that is, finance requires free flow of information, free flow of dollars, or whatever currency you want, or payments, broadly speaking. The best ideas should attract the most capital, for development or otherwise. And I think that is disconnected right now. And we've seen some of the progress that we have made since the, if I may say, since the mid-90s. We have lost some of that in the last couple of years with the disconnects that have taken place and the sub-blocks that have taken place. And the fact that smaller countries are kind of left to fend for themselves, while the reality is global finance requires a smooth transition between countries on a continuous basis. So I'll stop there and give it back to you, Prakash.
Thank you very much, Neil. Really thought-provoking comments. I really like the word trust. I think, as you mentioned, it's central to finance, but actually, even if you map it back to that geopolitical fragmentation point that you were mentioning, I find, again, it's the lack of trust that lies at the heart of that fragmentation. I won't ask you the cheeky question of who's going to win between Singapore and Hong Kong, but maybe we might come back to that later. Okay, I'm going to turn now to Suan Tek Kim. Tek Kim is the Executive Director and Head of Research at UOB, where he heads macroeconomic and financial market analysis with a focus on Greater China and the ASEAN region. Now, Tek Kim's going to help us zoom in a little bit more on China, just kind of given the large role it plays in this region. Along, I think that changing growth dynamics, I think that I talked about at the outset. Tek Kim, over to you.
Right, thank you. Thanks, Prakash, and so thanks SER and Professor Gua for having me here today at this session. Just quickly, I'm assigned the China topic, and of course it's an important topic, whether you are in academics or you especially in business, where developments will have direct impact and also consequences on business outcome. All right, so for China itself, I just have 3 points to cover, although I have a deck, I'm not using it because I believe you only have about 5 minutes each person. So I just want to but the deck is available to send to you if you ask for it. Okay, so for China, I just have 3 points to cover. One is related to what Professor Sack spoke about this morning. If you were here this morning, you heard him talking about China not going to dominate or rule the world, right? So this is related to what we are looking at, what we see China's growth prospects going to slowing down a bit compared to, let's say, in previously. All right, so a bit of slow growth in China, not necessarily a bad thing, but slower growth, more moderate pace. All right, because of all these factors, where even if the exports going well, but domestic factors are the one that are basically a drag factor. All right. Second thing is against this backdrop, what is the government able to do something potentially in terms of policy support from a fiscal policy point of view, and also from a monetary policy point of view, with this interest rate policy, and then fiscal meaning the spending by the government, right? And then with combining all these 2 factors, so for companies, right, for companies operating in China, for investors in China, what you'll see is that returns are slowing, maybe slower, but more competitive for businesses. So what is a natural thing that they will do? They'll look for, they'll go overseas, look for better returns elsewhere. So that elsewhere will be overseas market. At this point, some announcement, I will talk about it a bit more later, is that the Chinese government has actually put in a bit more scrutiny in terms of outbound investments, right? Moving away to overseas. A bit more scrutiny, tighter monitoring, and a more unified way of looking at or assessing outbound investments. right? So that also poses challenge for example, for companies in ASEAN, for ASEAN itself, because we probably will see less inbound, maybe different type of inbound investment, as ASEAN is one of the destinations which my colleague Selina will talk more about later on ASEAN. All right, so quickly over these 3 points. So what we are seeing is that the exports have been doing tremendously well in China, partly because of the AI, right? The AI demand. So if you look at the Chinese first 6 months of exports, is year on year is up about 20%, right? Up about 20% year on year for the first 6 months. So driven by these semiconductor, electrical equipment, etc., related to AI. Same time last year, 2025, the same period of 6 months, export growth just about 7%. Right, so you are talking about 20% versus 7%, even though the base is already quite high, and yet on top of that. So exports, manufacturing related to that has been doing quite well, but at the same time, domestic demand has been quite weak. You will see the retail sales is actually has trended down. It has been trending down since I think last year, after peaking last year, it's been trending down year on year basis. So partly that's because several factors. One is fixed investment. Fixed asset investment has also slowed down, whether you're talking about infrastructure, you're talking about property, fixed investment has been slowing down, even declining to in some cases. And that also feed on to real estate performance, right? Your property performance has been also quite weak. Most of the time, if you compare Singapore property with China property prices, we are talking about totally different worlds. Right? One is worry about too high, the other one worry about prices declining. Potentially, that is also a policy design or desire. I won't go into that for today's session. So overall, for China, second quarter performance has lagged a bit, slowed down. It's not like we are talking about recession or anything, but just slowed down to just about 4.3% year on year, right? Second quarter is slower compared to about 5% in the first quarter. So for the full year, the Chinese government is looking at about 4.5 to 5%, right? 4.5 in terms of GDP growth. So you're talking about, you have about 4.3% in second quarter. So it's already sounding alarm because for the second half of this year, we are going to be running a lot faster in order to achieve that 5%, let's say 4.5 to 5% target, because first half you only achieve about 4.7%. Alright, so 4.5, 5%. So for the full year, we are expecting about 4.6% growth for China. Not so bad, but if you compare to historically, on average, it's about close to 7% between the period of just before COVID, 2015 to 2019. 7%, so now we are into that 4-ish%. So that also ties into what Professor said this morning about China will have also slowing down a bit in terms of the share, right? Slowing down, it's still large because that 4.7% growth will still, if it happens, will still generate the size of Taiwan economy per year, right? In that year, this entire Taiwan's economy or close to Switzerland, 1 trillion. Right, so we are talking about 20 trillion, about 4.5%, 4.7%, still a sizable amount, but just that the speed will be slowing, and we are going to see that developing over the next period. Okay, so for is the government going to do something? The target is maybe a bit stretching for the current activities. So policy support may be coming from fiscal policy. After all, it is still running in terms of in terms of fiscal deficit. It is still quite healthy at this point. So there may be some room for fiscal spending, but it's not going to be a big way, right? It's not going to be a big way than what we have seen during 2008. Where you have this big splash of money. It's not going to be like that. They're probably at the edges. Some of these are subsidies for retail sales. They're still going on, but it's not going to be a big way. In terms of interest rate, monetary policy, maybe you have some rate cut coming, but we don't expect any rate cuts anymore coming in from China. a bit on the reserve requirement ratio down there. So we are talking about edges, at the edges, some fine-tuning of policy, not going to be a big way. Now the last thing I want to mention is about this outbound investment. The government just published this latest policy number 837 that effective 1st of July. What it means is that the State Council, right, this policy previously it was just from the FX from the regulators, they will just assess on maybe on foreign exchange requirements, etc. Now it's at the State Council level, kind of like a cabinet level policy regulations to scrutinize a bit more on outbound investments for individuals and also for companies. So what happens here is that now you have companies now thinking a bit more carefully, and also the approval process may take longer. And the most recent example that's related to Singapore versus China, coming out from China, is this AI company Manus, right? I'm sure some of you already know about it, Manus, where the Chinese regulator government actually stopped the sale of this AI company Manus, which is based in Singapore, right? So, and this is also related to the regulation where sensitive technology transfer requires government approval, which is very similar to US, where these sort of outbound investments are now at the national security consideration, right? Considerations for national security and also more overview and control. So that has implications on China, on ASEAN. Because if you look at the latest number coming out from China 2024, roughly about half, close to half of the outbound investment from China, that is ex-Hong Kong, because a big bulk of it is going to Hong Kong for OTI. So roughly about half of it is actually headed for Southeast Asia. Okay, manufacturing being the main one. So that will have some implication. That will have implications where companies will become more selective, or even government will be more selective into allowing outbound investment. And for those companies or banks like us, OCBC and UOB and DBS operating in this part of the world, when the inbound coming from China may be of a different nature or maybe more selective. So these are the three areas I want to talk about. Thanks, Prakash, I'll pass back to you.
Thanks, Nick. I think your point about exports is maybe something we want to get back to a bit later, because yes, the numbers have been very strong, but there's something different, I think, about the composition of exports this time around than, let's say, 20 years ago, right? So 20 years ago, it was perhaps a bit more kind of a traditional growth model where you are exporting a lot more lower quality manufactured products. Now, you are actually exporting at the higher end, and so you are competing directly with a lot of the advanced economies industries. Some have called this China Shop 2.0. And maybe unpacking what that means for this part of the world, I think we'll get into that a bit later. Next up is Selina Weng. Selina is the Chief Economist and Head of OCBC Group Research. Selina, I wonder if we could bring the attention now to ASEAN. I mean, it's a very diverse region, but again, I think one that sits at the crossroads of some of the bigger forces I think that are out there. You have some slides. I think maybe we can have some pictures to break up the monotony of our voices a little bit.
Okay, so first my thanks to SER and also to Prof. for inviting me for this. I do have some slides. I recently did a 90-minute presentation session. So you're getting the 5-minute version of it. Okay, so bear with me. You know, to me, I'm not going to start from 180 like Prof. Jeffrey Sachs. You know, I'm going to start with a much shorter time frame. So let me start with the good news first. You know, ASEAN is obviously coming through a period where we are benefiting. What are we benefiting from? Right. First, you see, actually, in terms of economic footing, we're stronger. Right. You actually have the upgrade for Vietnam and Philippines to the World Bank middle income status. Right. Growth has been very strong. If you look at the bottom chart, maybe apart from Thailand that's a bit sluggish, the rest have actually been on this very steady uptrend. And this is post-COVID, right? And if you look at the next slide, it tells you where is the source of growth coming from. Tourism has basically almost reverted to where it was pre-pandemic. And then, Neil talked about family offices. There is a lot of wealth growth that's happening across the region, right? Indonesia, Vietnam, Philippines, Singapore, Thailand, etc. Ultra high net worth, growth, fastest 5-year forecast, right? And then, of course, this drives spending. It drives hospitality, retail, real estate, lifestyle, etc. So it's a good story to tell. Okay? Then, if you look in terms of the economic linkages, a lot of people think back to like 1990s and they say, well, ASEAN economies are basically just a proxy for cheap Chinese exports to get exported out to the major economies. But actually, I want to show here that actually that story is outdated. Okay? Because if you look at China's export position with ASEAN 5, you can see it's very diversified now. And it's gone way beyond just labor-intensive items. In fact, electronics manufactured goods now is huge. And that's both a testament to China coming up the value chain in terms of manufacturing, especially for EVs and solar and now increasingly chips as well, but also the role that ASEAN economies play in the whole regional supply chain as well. So, to me, this whole dichotomy about this binary choice between choosing between US and China, I think the answer is very clear. It's just whether one side wants to see it. Okay. Then let me talk a little bit about, does this mean that ASEAN is immune to what's happening in the world in terms of the global challenges, in terms of the energy vulnerabilities? No, it's clear that we have big exposures to crude oil, and we have big exposures to the supply that's coming through the Straits of Hormuz, or rather the lack of supply that's coming through there. And you can see in terms of energy dependency, we are still very vulnerable. Okay? But I suppose in time to come, policy reactions will also evolve. So you look at the acceleration in terms of the efforts for the ASEAN Power Grid. That will take a bit of time, but it's part of the whole resilience and diversification strategy. It will come, right? And then, of course, tariffs, right? Last year, the big story was tariffs. It's not the end of the narrative yet. Last week, we've heard new tariffs coming on stream to basically replace the global 10% tariffs. But actually, financial markets look way ahead. They're kind of like gotten beyond the tariff story. You look at the net impact of the tariffs, the fact is, even whether it's 10% or 12.5%, the bulk of the exports in ASEAN are exempt. This is your semiconductors, this is your pharmaceuticals. Of course, whether they will remain exempt in the future, we don't know. I mean, Trump is already talking about 100% on generic drugs from 2028, and semiconductors may follow, we don't know. Okay? But I think effective tariff rates at this point in time is still relatively low. Singapore is about 6.1%, according to our calculations. Indonesia, that's the highest, is about double that, but still relatively manageable. What we have seen in the past year is that trade and businesses find their way around the tariffs. Tariffs are a tax, but the question is, are people willing to pay? So if global growth and global demand holds up, we think it should be manageable. Does this mean that everything is hunky-dory? Of course not, okay? Now that the Fed is turning towards a hawkish recalibration of policy intentions, where will ASEAN central banks go from here? We do expect a bit of policy rate hikes to come across ASEAN. Some of them have already started. But actually, a lot of the times, a lot of it is being driven more by country-specific idiosyncratic kind of factors, rather than just simply a story. Because the Fed hasn't cut rates recently, they haven't hiked rates recently, right? So let me just quickly jump into some of the country slides, some of the key highlights I want to just show you, okay? Singapore, we know, growth has been on a turbocharge, AI, right? So the question for a lot of the countries that are plugged into the AI boom is a question of when will this tailwind turn into a headwind? We really don't know the timing, right? But you're starting to see some concerns about the circularity of the AI investments between a few companies. Some of you may have read the news about chip makers guaranteeing their end customers supply. Whether you believe in the cockroach story or not, it does give you a little bit of a warning signal from here. Okay. So Singapore is a clear beneficiary. We do see growth upside, 4+%, possibly could hit 5 for the third year running. We are way above our medium-term trend forecast. Okay. This also means that if you look at a chart on the right, it just tells you electronics is almost single-handedly driving manufacturing growth and trade growth for Singapore. Okay, so it's as good as it lasts. MAS has tightened monetary policy for the second round yesterday. They are very watchful about inflation. Let me move to Indonesia. Indonesia has been a little bit in the spotlight recently, okay, because of some of the negative headlines. Rating agencies are, scrutinizing them a little bit closely. And yesterday we got the surprise about the resignation of the PI governor. Typically, markets don't like this kind of surprise resignations. I know that he was actually in Singapore just last Friday meeting with analysts, so it did come as a big shock to market watchers. Okay, and some of the reasons why there has been a lot of policy focus really is because of policy direction, right? Because of the twin deficits, because of the free meal plan, which is well and good in terms of the social welfare objectives, but coming at a time when fiscal finances look to be under pressure. And the question, of course, is this sustainable, right? And then, of course, the announcement about commodities under Danantara's purview, although they have backtracked a little bit on that. So all this is basically, some of the pressures that people see adding to Indonesia's problems. For Malaysia, again, upside growth because they are plugged into the AI story. So very similarly, semiconductors, data centers, all doing very, very well. Okay, so we have revised our growth forecast higher. Okay, so for Malaysia, they are very resilient, but they're not immune. What do I mean by that? They do subsidize fuel, and the fuel subsidy bill will increase depending on where you think crude oil prices will average for the rest of this year, right? And of course, they do have state elections that's already coming up and has happened in Johor itself. And markets, of course, looking at the whole political noise because of whether general elections will be called earlier than not. Philippines, we think, probably most exposed to stagflation risk. You can see the blue bar on the left. Net exports has been tapering off quite a fair bit. They are not benefiting that much from the whole AI boom. Okay? So the outlook is actually a little bit more challenging, right? And then on the flip side, BSP has hiked rates, and they probably will continue to do so because of higher inflation. Thailand, similarly, also under a little bit of pressure. They are concerned about growth. In fact, talking to some of the BOT policy makers, because the Chinese EV makers are now in Thailand, actually they have displaced some of the Japanese automakers that used to be very active there. The key difference is that the EV manufacturers don't hire as many workers as what the Japanese automakers do. So for them, job creation is an issue. Okay. But they are also trying to push into the digital space, so you can see clearly FDI applications and approvals have shot through the roof. And in particular, you look at the yellow and blue line, right? China and Singapore are key investors in this space. And then last but not least, we have Vietnam. Vietnam is shining very bright, right? Growth has been on the tear, right? Real GDP growth probably this year we think will average above 7%. And what are the key drivers of this? Well, services is doing well, but industry and construction almost double-digit in the first half of this year, right? And we do think that going ahead, the semiconductor upcycle will also continue to see, momentum going into Vietnam. So it's quite clear from here, export and manufacturing growth will continue to be one of the key drivers for the Vietnamese economy. And actually, that kind of brings me full circle, because I said, what if the AI tailwind becomes a headwind, right? Markets are FOMO, economies are also FOMO. When there's a big growth driver, you want to get into it, but what happens when the music ends? I really don't know when is it going to end. Everyone keeps asking when is the bubble going to pop, okay? But this is not about when the bubble is going to pop, because this panel here is not talking about your PA, it's not about your stock investments, but it's really looking at what are the sustainable growth drivers for ASEAN, and I think that's the bigger question here. Thank you.
Thanks, Lena, for the very detailed overview of the region. I think I agree with you. One thing that struck me when I was listening to you is really on the narrowness, actually, of the drivers of growth right now. Everything seemed to be related in some part to where you are located on the tech stack for AI. And I think, again, another topic that we will come back to in the the Q&A. Last but not least, we have Jamus Lim. Jamus is an associate professor of economics at the SERC Business School. Previously, he was the chief economist of the Third Round Group, which is an investment management firm and wealth advisory firm, a lead economist at the Abu Dhabi Investment Authority, the Sovereign Wealth Fund, as well as a senior economist with the World Bank, where he led a number of initiatives on macroeconomic forecasts, along with analysis of trade, finance, and governance issues in East Asia. Jamus, you have studied this region for a long time, and I'll even make a plug here that I've even written a textbook on it. Can you help us tie these kind of various strands here together and kind of get to the heart of that fundamental question for the session, which is what's next for Asia?
Thanks, Prakash, for the plug. I'm keenly aware that it's after lunch, and of course, with all the riveting panelist discussion, you may actually still be awake. As the only academic, I'll try my best to be as obtuse as possible, lull you into a gentle post-lunch slumber. So my role here is to basically touch on the trends, and this was something that was set up already by Prakash, as well as Man. But if there's one theme that I would wish to elaborate on, it's just the notion of heterogeneity and diversity in the region. This is something that Selina also underscored in her remarks. So I'll talk a little bit about the big themes that were brought up. One is geopolitical pressure. Now, of course, if there's one word to summarize economics, it's probably something like scarcity, which drives exchange and efficiency. But of course, when you start to talk about politics, that one word summary would be power. And that drives interactions, especially international interactions when we're talking about geopolitics. And if you think about Asia, the major powers, of course, nobody denies the dragon in the room, so China would be one of them. But the other one that sometimes is a little bit forgotten, but I would argue still has tremendous economic influence in the region, is actually Japan. And this is especially in terms of the fact that Japan, as one of the original OG, if you will, surplus nations, which has been sending since using the flying geese model and maintaining large international investment positions even till today, it has a significant influence on East Asia as well as Southeast Asia. Now, no offense to the so-called middle powers, but I would probably put something like India there. Of course, India, in PPP terms, is now larger than Japan, but it still confronts, I would argue, in part owing to its relatively low per capita income, is still confronting a lot of domestic challenges. And I think in the immediate future, a lot of its focus, despite Modi's best aspirations, will still be inward focused and trying to address internal issues. The other middle power in the region, of course, is Indonesia, the largest economy in Southeast Asia, and importantly, a key source by dint of its population, a demand driver for, as we start to see an expanding middle class there. Now, of course, then there's everyone else, and the weak suffer what they must. Unfortunately, a lot of these smaller economies will have less to offer by way of crude bargain. They also have little by way of leverage. So if you think about what that means from an economic perspective, so I'm going to overlay a little bit of both non-cooperative and cooperative game theory here. If you think about it from from cooperation, let's start with something positive. Even in a very standard Nash bargaining framework, the Nash solution would generally benefit those with greater weight. And why does that weight going to derive from? That weight is going to derive from the relative economic size and what they bring to the table. So they are going to be able to extract better outcomes for themselves as a result of that bargaining solution. And that's just the reality now that we've moved away from a rules-based global order toward one where bargaining comes to the fore. Of course, we also have the possibility of the non-cooperative outcome, which, of course, most people would think about the prisoner's dilemma and what that means. And unfortunately, I think we will start to encounter more and more situations where you have what is clearly an optimal outcome, will be a Pareto preferred outcome. But unfortunately, due to the logic of non-cooperation and the prisoner's dilemma, we will converge on the stable outcome where everyone is not as well off as they otherwise would be. And I think that's going to be the reality of a world where geopolitics dominates much more than economics. Now, when we think about deglobalization, so this was a theme that was brought up as a deglobalization and the rupturing of supply chains and a shift toward regionalization. So I think here we're going to move and start to observe a greater emphasis, even than compared to today, of trade that occurs in blocks. So the natural blocks that you can think of that the world would fracture into would align largely with the major currencies, right? So just like you're going to have a multipolar currency regime, you're also going to have trade blocks that align according to the East Asian bloc, if you will, centered on, say, China and Japan, a Western European bloc, but increasingly you're going to see that influence that they had in part because of colonial relations on Africa, and then of course the Western Hemisphere where you will have North America, but also Latin America. And I think when you start to think about deglobalization, in a sense, a lot of that aligns with the logic of a gravity model. If you think about the traditional gravity model, trade, of course, is intensified by, it's most intense when distances are short. And so in some ways, it shouldn't surprise economists at all to think about fracturing into those blocks. But it does mean that the traditional role of intermediary nations, which includes ourselves, but also others like the UAE, Dubai, for instance, as well as Hong Kong, they will start to need to pivot away from a global intermediation role toward much more of a regional intermediation role. And I regret to say this, but Singapore historically has sometimes put trade with its near abroad on second fiddle as compared to the rest of the world, and I think that will need to change. Now, at the same time, with this fracturing, I think you will also start to see separation between the roles that different economies play. So if you think about what the natural ones are as dictated by comparative advantage, for a time there would be manufacturers, but here I think you can break it into low-end manufacturing driven still by comparatively lower wages. So these are the Vietnam's, Thailand, and still to some extent China, especially inner China. But of course you will have the high-end manufacturing, and the high-end manufacturing is coastal China, together with Korea and Taiwan, as anyone who has seen the nosebleed prices, although that has corrected of late in the past few weeks, of the semiconductor sector. And then you have the traditional role that's going to be played by commodity exporters. So these are the Indonesias, Malaysias, Australia, the GCC, if you will. Some countries, in Indonesia comes to mind, of course, have tried their level best to break free from this, the shackles of just being low-value added countries. Unfortunately, the speed in which technology changes, that just disintermediates. It used to be that, well, Indonesia maybe could go up the value chain when it comes to nickel and battery technology, but it seems like very quickly nickel is being ruled out by advances in technology. Okay, so I'm going to talk next about demographics. And here, of course, you have the aging nations. We are in one of those aging nations. All the NIEs, in fact, Hong Kong, Taiwan, South Korea, we are all aging nations, but also China. And sometimes we forget that what distinguishes the demographic trajectory of these nations is the speed in which the working to non-working age population actually rose during their fast-growing years, and by the same token, the speed in which it will then revert. And that speed means that very quickly policymakers in these countries will need to adapt. By adaptation, what do I mean? The main one, of course, in terms of public policy is public finance. So there will be increasing pressure when it comes to healthcare, of course, as well as public pensions. Even in countries that are relatively well off, Singapore comes to mind, anticipated public healthcare expenditures are sufficiently pressing that we've all waged and mourned about the increase in GST, which was meant to finance a lot of that anticipated increase in healthcare financing. And of course, on the other end of it, you have youthful populations, and so the Philippines, Indonesia, India comes to mind, and they're going to enjoy the tailwind that comes from an expanding working age population. But the key role for them, as others have already alluded to, is the need to absorb them into productive jobs. And unfortunately, the nature of job displacement, especially at the entry level in recent times, will mean that policymakers will have their work cut out for them to be able to get these young workers into productive jobs early on in their career, so that eventually they will be able to contribute in the mid-career stage, which is still very much in demand, but that's not currently the case. And finally, general purpose technologies. The rest of the panel has already talked about AI and robotics. I obviously would concur with that point. And of course, as a general purpose technology, this is going to benefit all countries across the region. It's my own pessimistic view is that it's going to be, it aligns more with authors like Daron Ajamolu, who argue that the likely payoff is going to be, in an optimistic case, closer to 1% of GDP a year. Now, that's not a trivial number. Lots of advanced economies would gladly give their firstborn for 1% GDP growth, but nevertheless, it is likely to be smaller than some of the hype factors have emphasized about what AI might mean in terms of disruption. Now, where I think the rubber hits the road is countries in the middle of the human capital distribution. And they're going to be disproportionately affected. Why? Because, well, firstly, they're going to be relatively too expensive to continue to do all the low-wage, relatively low-wage jobs. But at the same time, these jobs are going to, the job that they could do are going to be disintermediated by even relatively crude applications of AI paired with robotics. So if you think of our neighbor across the causeway, Pakistan, Lebanon, these are those middle human capital countries which I think are going to struggle. Of course, this doesn't exempt high human capital countries, such as Singapore. Here, the emphasis, of course, is on making sure that we continue to emphasize the human traits being leadership, empathy, something that economists know nothing about. But things like networking, critical thinking, that one we know a little bit, perhaps more of. Okay, stop here.
Thank you very much, James. I think you've really highlighted the diversity, I think, in this region and across all these mega trends that you brought forward. It's just not going to hit the region in the same way. We have about 15 minutes or so for questions. I'm going to open it up to the floor. I think there is a mic that's floating around somewhere. But if you could just raise your hand, and I think that mic will find its way to you. Just to the back, yeah. Just behind you. Oh, sorry, I think we took his mic. Okay. There you go.
Hi, good afternoon to the panel, and thank you for all the insights. Just going to be straightforward. First, it's going to be about energy, which has been dragging our growth, and second, about consumption. The first one is that given that transition to renewables will take probably around 15 to 30 years, crude oil will still remain a strategic component of the global energy system. But what we're seeing is that refining capacity in established Asian hubs such as Singapore, South Korea, China, and Japan is unlikely to expand overnight significantly. And while the bulk of excessive refining capacity is still in the Middle East. So from a macro perspective, what are the implications of this growing geographic concentration for Asia's energy security and external vulnerability? So supply chains become exposed to geopolitical risks, including the emergence of parallel markets for Russian oil, what policy should ASEAN pursue to enhance resilience? So the second question is, to what extent might current external vulnerabilities accelerate a shift towards consumption-driven growth? While the IMF has advocated such rebalancing in China, will similar trends emerge in other economies? Is this just a cyclical adjustment or part of a broader strategy to enhance sustainability growth? Thank you.
No, thank you very much. Great questions. Maybe we'll tackle the kind of energy security questions. Open to anyone who wants to. Selena?
Okay, can I take a stab at it? So, it's a bit of a double-edged sword because when the Middle East crisis happened, people were scrambling for supplies. Those big countries that had strategic oil, petroleum reserves seem to be better off. And they have actually released quite a large amount of those. So the question, of course, is that some of this restocking of the reserves will happen. They will probably keep oil prices elevated for slightly longer, even if the Straits of Hormuz does reopen. I think it also kind of like stresses the importance of having your own security in terms of supplies for energy, right? That's why I don't know about the rest of you, but it did come as a surprise. I didn't know that we have enough oil stocked in the underground caverns in Jurong Island that can last Singapore economy till the end of the year, until the crisis happened, right? So I think it's good and bad, okay? The good part is people will think a lot harder about what are the critical and essential supplies that they need. The problem with that is that it's an ever-expanding list, right? Now people are looking not only at high-end chips, but also critical minerals, etc., etc. It never ends. So for small, open economies, even if you're relatively advanced and well off, there's a limit to how much you can stockpile for everything under the sun, right? Then that brings me back to the point about actually making friends is important, right? So you want to be as diversified in terms of your sourcing arrangements, in terms of your trade arrangements, and you want to remain open. The other point I wanted to add was that at a forum that OCBC had last week, we had a Chinese speaker, and he said, okay, this is according to him, he said that China has the largest coal reserves. So China has no problems, even if this energy crisis went on. And that I thought was quite shocking to hear. Yeah. But it does mean that for countries that are not energy self-sufficient, they really have to look at ramping up in terms of renewables. That's why Singapore is looking at nuclear and all the rest.
No, thanks, Selena. I think every country is trying to navigate that trilemma, right? So you've got security, sustainability, and affordability. I think right now, as you mentioned, I think the focus is on security, but you could see a scenario where technology actually helps you solve this the situation where you can achieve all three. But I don't know if anyone else wanted to comment on that. James?
Yeah, I'll chime in very quickly, and that is both in the short and the medium term. In the short term, of course, what we have observed is that contrary to what a lot of talking heads, including people like us, have suggested at the initial outbreak and the shutdown of the Straits of Hormuz, is that we didn't observe as large a spike in energy prices as we initially anticipated. That was, on hindsight, of course, a lot of that is because of a combination of factors: inventory drawdown, the refining capacity was damaged, but not as much as some would have thought, and just perhaps most importantly, a lot of rerouting around the strait. And I think that speaks to something that is about human ingenuity, just how, because the best solution to high prices, as you always hear, is high prices, because it forces innovative individuals to work around these kind of constraints. If I were to have something that I want to monitor in terms of the potential direction of energy prices in the future, it's going to be to stare at the crack spread. And that in particular will, I think, be a very good indication of how much that the elevation is going to be in the future. In the medium term, we also spoke about energy alternatives. The only point I'll add to this is that, of course, we know that this has also prompted medium-term exploration into technologies, nuclear, renewables, as well as battery technology. I think the big thing that still hasn't made as much progress insofar as the technology is concerned is in terms of air travel. Right now, batteries are still overwhelmingly heavy. We haven't figured out how to put light batteries on planes. So if you're looking for summer or winter travel, that I think will still continue to be a little costly.
Arun, do you want to add anything? Yeah.
Just,
Go ahead.
Yeah, just very quickly. I think the answer I would pose is one is I think there's going to be a lot of rethinking. So, for instance, in Singapore, we were thinking, oil refining is really going to stretch our carbon budget. Maybe that's not the kind of industry we wanted. Maybe you should phase it up over time. After this shock, I think that's going to change. We're going to hang on to it. Second thing I'd say is that more and more countries are going to realize that you cannot address this problem alone. So you have to do things together. So for instance, why do we have a Jurong Island and a rapid project just across the water from Changi in Malaysia operating separately? I think if you combine the two, you will find an extraordinarily competitive
Mike's shutting down on me.
extraordinarily competitive oil, petroleum-based cluster. So I think you see a lot more joint entities. Third thing is that the reality, as you said, is that energy transitions will take a long time, and we will have to depend on coal, fossil fuels for much longer than we thought. And I think the only way we can get around the problems that poses for global warming and all that is to use technology. So for instance, in China, in a mine in Kanse, the Chinese have invented a new form of carbon capture and storage, which if it is able to be replicated, could make coal effectively a clean energy source, right? If it can be replicated. So I think we'll see that technology will offer us more solutions than we expected. Thank you.
Sure, go ahead.
Very quickly, just to add to that, I think what we have seen in the last few months just reinforces the case for nuclear energy. And we've seen that in Western Europe, where France has had nuclear and so many new projects are being set up there as compared to its neighbors. I think we obviously need the right safeguards. It's part of the course, but the reality is it just reinforces the need to look at diversified sources of energy. Nuclear has to be part of that equation.
Thanks, Neil. I know you have one question on consumption. Maybe I'll pass it on to Tinkin.
Sure, thanks. Thanks, Prakash. Okay, before I jump into the consumption question, I just want to add this is a hot topic on energy. I think you asked about policy, right? Beside all this alternative energy and also green energy and things like that. So the other thing is that the traditional energy, right? We're talking oil and gas and all those things. Some of the countries realize that the energy security has to be in its own hands, right? For example, if you look at Vietnam, they already started to, I think, build storage reserve, strategic reserve, build storage and refining capacity because we realize, in times like this, you cannot rely on other people to supply you. So instead of efficiency, just now I think Prakash put it very nicely, the trilemma, right? What was that again? Sustainability, security, sustainability, and affordability. So it's going to be expensive. Just like supply chain diversification, I mean the most direct way is to consolidate everything into one place for the economies of scale. But for security reason, you have to duplicate it. You have to have a diversification source. Diversify. So that's what's happening to energy policy, your own reserve, and also production capabilities. Right? It's more expensive, no choice, we have to do it. And for Selina's question, you're surprised. If you remember during COVID, we had rice reserve. Right? We had rice reserve that we could release. So you can imagine Singapore government, things has thought about a lot of these things. We didn't have a sand reserve. Right, for building sector, we have sand reserve for building sector. So you can imagine other countries will be doing the same thing, and which is, I think, for its own protection, will be the right thing. Now about the consumption question, going to the consumption question, China has a very good, I think a good example. Initially, it tried to, I think, it tried to see whether the consumption-driven kind of growth could happen in China. It actually did, especially during COVID. It gave a lot of these vouchers, very similar to Singapore, those CDC vouchers and things like that. It did also have periodically put out vouchers, but they found, I think the outcome is actually not very ideal for China. So it ended up going back. Now what we are seeing is that going back to the export-led sort of growth, and also in a way investment-led growth as well, right? So that is the model may not work for a lot of economies, especially if your income is not high income. You are in a middle income or low to middle income. So that model may not work so nicely or so ideally for these countries. So we still have to be back to generating values in terms of export, manufacturing, or even investment into infrastructure and other things. So that is, I think, something we need to, study more or look into more carefully if you want to adopt that kind of consumption-driven sort of model.
I think it looks, yeah. Thanks again. I think we're at time. I'm going to leave the panel with one question that I'm going to ask everyone to give you 1 minute or less answer to this question. And the question is as follows, right? In general, when you look back at the region, you can think of different defining characteristics, right? So starting from the early 90s, you had the Asian kind of tigers, very export-led economies. Then you had the Asian financial crisis, another 5 years. Then you had kind of a very globalized environment in the early 2000s. So the question is, 10 years from now, when we look back, what do you think would be the defining characteristic of growth in Asia? I'm going to do it the opposite way around. So I'm going to start with James as a quick answer. If you all put on your best forecasting hat or your crystal ball, what do you think would be the defining growth characteristic of Asia?
Yeah, like Prakash, I used to be in the Sovereign Wealth Fund, a competitor Sovereign Wealth Fund, and I know how dangerous it is. The good thing about being in the Sovereign Wealth Fund is that when you project 10 years in the future, usually you're in a different job by the time you call the question. So I will say, when it comes to Asia, there's a lot of pessimism surrounding prospects for China now. I think that it's going to be more resilient than people think at the moment, but at the same time, it will be taken a notch down from in the best case scenario. But at the same time, I think a lot of us do not anticipate that India would rise as much as it would, but I actually am a little bit more optimistic about the prospects there. I think India will find its own. It will find it in its own model, not the manufacturing concentrated model. Perhaps tradable services will become the driver, but I think that's the surprise that I think we might have to wait for.
A shift from China to India then. Sunil?
I thought you were going down the road.
that difference. Sequence.
Okay, I sit in the global markets in the bank. I'm much less, say, if I get my predictions right for the next 3 months, I'll be starting from year to year, much less 10 years down the road. But I do hope to see, that Asia continues to thrive and to do well. I think for ASEAN, really, it's about unity, about holding together in times of challenge, and especially when there's external pressures. Because ASEAN, at the end of the day, are relatively small in size, even as a bloc, compared to the rest of the world. So to survive when there's major economies contesting each other, when there's fragmentation and polarization, it's really about unity. And with that unity, then you can get trust. With that trust, you can get infrastructure and investments. And with that infrastructure and investments, you can get growth. And that's, at the end of the day, is most important, right? About uplifting the welfare of the people.
Very, very inspirational. Tekin?
Sure. Okay. I think for next 10 years, again, I think I'm putting on this prediction hat. All right. Okay, but with I think one factor that is coming to mind is of course AI. Right? Although there's a lot of hype and all that, we can see AI as a sort of the fourth industrial revolution kind of thing, right? Enabler. So for those countries, whether Asia or outside, for those countries that are able to use that enabler effectively, I think that will have a very good future. And I think Singapore is one of them. I'm quite confident Singapore can thrive in this environment. I'm sure you have read the final report on economic review, right, from Singapore government. Have you? Economic strategy review? No? You want to take a look. So for that, I think we can. I think we should be quite hopeful. Other countries that should be able to ride on this, of course, China, Malaysia. I'm quite confident also, and also Vietnam. Right. The other thing I'm quite optimistic is about Vietnam. Not one thing is of course the hardware. Right. The hardware part of the AI world, robotics world, the hardware part, and the extension from there. And that's what Singapore is going to do. Extension from all these capabilities that we already have. And then these are the few countries I think should thrive, other than maybe also Korea, as also, and also to a certain extent Taiwan.
As you may have gathered from my comments earlier, I'm very bullish on prospects for Asia in the next decade and further ahead. To me, there are a couple of clear indicators of what will work. First and foremost is governance. And within governance, I put in policy making at the federal level, policy making at the state level, in the case of larger countries. But most importantly, having the right policies. So control what you can control as best as you can, and having the policies for that. The second is adaptability. And the reason I say that is there are many things one can't control. If you get stuck with a 40% tariff overnight, you can't control the 40%, but how adaptable are you going to be, and flexible are you going to be? I'm not going to pick winners and losers because that'll take a much longer time, and it's much more nuanced to answer, because some countries do very well on the second part, which is adapting to tariffs, but do, quite frankly, a very poor job, and some of our neighbors right now are going through that, where the policies which they can control are not being managed properly, in my view. So, but on the whole, very bullish on the region.
Very quickly, I think talking about defining characteristics of growth in this region, in the past we always thought of growth as dependent on each country's competitiveness. That's important, but I think the real competition in future will be between ecosystems. Some of these ecosystems might be within countries, but more likely some will straddle countries. So we look at China, how it has achieved extraordinary competitiveness gains. Why? Because of its ecosystem. The Pearl River Delta brings together all these extraordinarily competent subcontractors, good infrastructure, local government support, and somehow that creates an ecosystem that works. I think if ASEAN is going to be relevant in the future, we've got to create those clusters. It cannot be just single country clusters because we're not big enough. So we have to think about, for instance, a southern Malacca Straits economic region straddling the large part of southern Malaysia, Singapore, and much of the Riau Islands and Riau mainland. And then I think we can create an ecosystem which can compete, hopefully, at least with some segments of China. Otherwise, things will be very difficult to compete.
Thank you very much, Manu. Thanks to all the panelists. If everyone could join me in showing their appreciation. It was a great session. Thanks.
Thanks again, Rakesh, and the panelists from the Economic Society of Singapore.